Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some more of the stocks that were in play today. Okay, first up, let's take a look at IMUC. Okay, it's still in the bull zone here in RSI at 66, so it's still below the 50 overbought level. Okay, these are some annotations that from our last chart. They have not been updated. Yeah, so ADX still looks good here with plus DI showing the bulls are in control. And so the thing with this chart is the volume. Take a look down here at the giant volume bars. So there's been 3 big days of volume in a row, and the share price has just slowly climbed higher. Notice how the candles have been riding EMA 4 support higher above the 50-day simple moving average at 33 and the middle Bollinger Band at 35. As long as support is holding, this new uptrend that started back here on September the 13th with the close above the middle Bollinger Band should continue. So what's going on right now is that this gap back here from back in July filled today with this upper wick. So now that's a climax. Now the question is it going to bust above the top of the gap, or is it going to pull back in and consolidate? And so if it breaks out above the top of the gap, the next target is up here at the 100-day simple moving average at 65 and the bottom of the next gap, which is at 70. So yeah, so a break above this bottom of the gap level should signal more upside potential, and you could see a run up here to the 100-day simple moving average. As long as the candles keep riding EMA 4 support higher, the chart is very strong. Okay, so take a look at CLSN. So this stock had a nice bounce today. Notice that that RSI corrected and it's at 62, so it has room to run until overbought levels. And then you have Fasto down here at 49, so that has a lot of room to run until 80. Even after the correction, notice that plus DI is still above 80x and minus DI, so the bulls remained in control. There was this really big move last week. There was a gap up open, so there's an unfilled gap down here, and then the share price ran above it basically was bouncing off of the 50-day simple moving average. It ran above the 100-day simple moving average and the 200-day simple moving average, and came close to the 300-day simple moving average up here with this close at $6. But then it pulled back sharply and it came down, and then now it's bouncing off this 200-day simple moving average at 314 support zone, and then there's also EMA 8 there at 321, and then notice that the close today was above EMA 4, the pink line at 357. So the chart's still super strong. Now the key level to break is the closing price from last week down here at about 380 or so. And so if they can close above that, then you've got the upper Bollinger Band here at 450 as the next target, and that's lined up back here with this March high close. Okay, so that's a big resistance level from a prior resistance level. And then notice that was also the top of a previous gap. There was another gap back here, and so the break above that level would put the $6 in high close and the 300-day simple moving average at 693 on deck. So what you bulls want to see is this 200-day simple moving average hold. If there is a close below that level, that would signal consolidation, and you could potentially see a pullback down here to test the middle Bollinger Band and 100-day simple moving average. So it's really important that that 200-day simple moving average holds. Notice that there was a volume spike. It was larger than the last previous 2 days, but it wasn't a giant spike. But notice that there was a declining volume pattern on the pullback with very light volume on Friday. So that was a signal that the sellers had tired and that it was setting up for the bounce. Okay, let's take a look at ANY. Okay, nice move today. It closed up 14%. RSI and Fasto are both under the 50, so they both need to get above 50 for the chart to be considered bullish and heating up. In the 40s, you know that they're heating up, but they're not at that level where they're quite bullish yet. They both need to get above 50. Now there was a bullish crossover on ADX. Notice that the green line crossed the red line and the black line to the upside. Okay, so that is a signal the bulls are taking control. But the big red flag on this chart is the long upper wick. Notice how long this wick is. Off of the 50 and 100-day simple moving average resistance zones. That's the green and gold line up here. And so the share price ran to that level today and pulled back, and actually pulled all the way back below the middle Bollinger Band at 307. Now that's currently the key level to break. That's this dotted purple line. It's also the 20-day simple moving average. It needs to get back above that level to get a new uptrend going. Failed to break 3 resistance zone, and then this gap below. There's a gap between high of day on Friday and low of day today. That gap could fill. Now notice that the pink line and the lime line are both pinched right here at 258. Bulls want to see that EMA 4 cross over EMA 8. That would be a signal the chart is heating up. Now if they fail to cross over and the share price drops back below both levels, that's going to be a signal the bears are still in control, and that the chart is still under pressure. So notice that when it was dropping, it was writing EMA 4 resistance lower. So it needs to get back above in order to get that uptrend going again. So yeah, this was a nice move, but the big pullback was a big red flag. Now notice there was a giant volume bar today, and the share price did close up 14%. But take a look down here at accumulation distribution. So there was a giant spike down, and then also shaken money flow. Notice the giant histogram was at its lowest level down here at -60, and so what that is that this is a big signal that there are possibly selling shares, possible dilution, and so it's that's always a red flag when a long upper wick forms like that after a big move. Notice that this was the top of this channel today. It hit the top of this channel. Notice the previous highs from back here in June, and then here in August, and then again in September. If you draw a descending resistance line across the top of those candles, you'll see that has been a consistent resistance level. And then once again, that level got hit again today and failed to break. And so what's going to need to happen is it's going to need to close above the 50 and 100-day simple moving averages, and then get above the top of this channel in order to head higher. If you see a break above 420 and a close above that level, that would be your signal that it's ready to run up here to the 200-day simple moving average. And so if you look down here, there was also a bullish crossover on MACD on the 8, 13, and 5, and the 12, 26, and 9 is pinched. And so bulls want to see a crossover there. Those are early reversal signals. And then also parabolic SAR. Notice the green dots are now below the candles, and so that's another good sign that the chart is heating up. It's trying to start a new uptrend. And then if you look down here at the commodity channel index, you got the break here above the zero line. So now it's positive, and so you have the bullish move, above -100, and then MFI is now above 80. So the chart is heating up. It's just got to break above that middle Bollinger Band. Okay, so take a look at the 15-minute chart. This is what you want to keep an eye on tomorrow. Notice that after it hit the high close here at 360, it pulled back. This is what we call this was the climax spike. So you got the long upper wick followed by a red candle. You've got the big giant volume bar followed by a red volume bar. This is all your signal to lock in gains. If you've got a 9 to 5 and you got in pre-market, or you loaded here at the open and then you were looking for a trade, you trade off this pullback, and then boom, you're done for the day, and then you can repeat the cycle the next day. For those people that are that half hour to first hour of the trading day traders, you got to learn this climax spike. Figure out the climax spike. You'll see the same pattern every day. That's your clue to lock in gains. So it came down here and it hit the middle Bollinger Band, bounced off, but then it closed back, below that level, and it turned into resistance. And so what's going on now is it's trying to bounce off the 50 simple moving average and the 300 simple moving average, this 270 support zone. It needs to hold that level, and then it needs to get back above this middle Bollinger Band at 291. If it can get back above that level and then break above the top of the channel, which is lined up with just a little above $3 here, then it could get moving again. Then you could see a run back higher. If this level fails to break, if 290 and $3 is still resistance tomorrow, then you could see the levels below tested, and if they break, then you could possibly see a drop down to 240 and 249. So it's real important that ANY can get through that 290 to $3 resistance zone. Okay, take a look at DELT. Okay, so this chart is starting to heat up again. Keep an eye on it. So you've got RSI here at 55. Okay, this is one of the materials specialty chemical sector plays, and so there've been a lot of stocks in that sector that have been running, and so now we've got RSI, held 50, bounced off of there. We want to see Fasto get back above 50. You've got still the bulls in control up here, even though there was a hook down on plus DI. You need to have that green line stay above the black and the red line to signal the chart's still really bullish. And so now we've got a bounce down here off of the middle Bollinger Band and the 50-day simple moving average at 113. That is the key level to hold. And so if that holds, if the share price stays above the green line and this dotted purple line, that's a signal that the chart's still strong. Now back here in the first week of September, it got above those levels and then it failed to hold and it pulled back and consolidated. And now it's back above, and so it seems like you know, if it can hold and stay above, it might get moving. Now, what it looks like to me when I was looking at this chart is okay. For one, okay, notice that you know, it had this long downtrending channel, and then there's this descending resistance line. So it's trying to break above the top of the descending resistance. So if it can get and close above that level, that will be a good signal that it's going to run up and test this the key moving average resistance zone. Up here, there's the 100-day simple moving average, the 200-day simple moving average, and the 300-day simple moving average. They've all converged, and so basically between 145 and 151. And so the share price needs to break above that level to head higher. What it also looks like to me, that like there's an inverse head and shoulders pattern. It looks like this is a left shoulder, this is a head, and then you've got the right shoulder over here with the neckline coming across here. This is lining up with this high close on the 12th. And so if you can get a break above the neckline and turn that neckline into support, that's going to be a huge signal that it wants to head higher. Notice how the neckline's lined up with the descending resistance. So this is a huge spot on the chart. It's a major resistance level. If there's a break above it, it turns into support. That's going to be a major bullish change in trend, signaling more upside potential. Now we'll have to get above these moving averages. If it does bust above this cluster of moving averages and it's trading above 150, then it'll be trading above all the moving averages and will be extremely bullish. So keep an eye on it. If it drops back below that 50-day simple moving average and the middle Bollinger Band, it'll be a signal that it's not quite ready to run and that it could consolidate further. Okay, take a look at INAP. This is a stock we've been following. You notice it's still at 65 here at RSI, so it's not above 70. On previous runs, you know, it's been able to head higher above 70, so it's got some more juice in the tank. It is hitting that temporarily overbought level on Fasto at 95. So what's going on here is it's got a really nice uptrend. Okay, so this is a sweet chart. Notice that back here in May, you know, the middle Bollinger Band started turning into support, and then it really got moving here in June, and then it just, you know, had a nice steady rise, and so the share price pulled back. It tested the 50-day simple moving average in the middle Bollinger Band, and that support zone held. Okay, the green line and the dotted purple line, and so notice how they're both at the same level now, basically here at 434 and 435. And so those are the key levels to hold. And what happened last week on Thursday, there was a close above high close horizontal resistance. That was the closing price from back here on August the 9th. And so this was our clue that INAP was setting up for a breakout higher. Whenever there's a close above the high close horizontal resistance, that's the signal that it wants to head higher. It gave a fake out on Friday. It pulled back. But notice the close was right there above EMA 8 and right at EMA 4. It was still really bullish. It just got ahead of itself above the upper Bollinger Band. And so today it pushed again higher. It closed above the Thursday high close. So that's another clue that it wants to keep pushing. So what we want to see is just this EMA 4 at 472 hold. As long as that level is holding, the signal is to keep riding. If there's a close below EMA 4, that's a signal it could consolidate. It might pull back and test that EMA 8. As long as the middle Bollinger Band and the 50-day simple moving average are holding, the uptrend is intact. So keep an eye on INAP. You know, it's got some volume picking up. If you look here at the MACD at the 1226 and 9, you know, it's got some room to run until the previous highs. So yeah, so it's keep an eye on it. If you take a look here, when the stock is breaking out, what we on a daily chart like INAP, you know, it's here making new 52-week highs. What we like to do is we like to look at the weekly chart, and so we had to take a deep look out here out to 2016 levels, going into 2015 for where the next resistance is at. You can see here it's breaking out this week above January 2016 resistance. So that is this level right here. So this is the let's see here. So it's August, the August high close, and that's the key level to break. That's the second week of August. So bulls want to see a close above that level for the week, and that's going to signal that it wants to break out higher. That's also the levels from back here in January of 2016. So what that's putting on is this close here on the first week of January, or the first week of January in 2016. That level and the 200-week moving average at 552. Those are the next targets. So if it can break above that, then you've got the 300-week moving average at 615. I mean, it looks like it's filling the jar back to these previous levels. You can see in 2015, this was a big support level here, lining up with the 300-week moving average at 615. So it looks like it has a chance to keep working its way back to that level. It have to close above that level and turn it into support to head up into the sevens. But yeah, notice down here, this was just a sweet signal to load down here, and you had two of them. First off, it was down in December of 2016. There was this hammer that formed at the bottom. First, you had an inverted hammer, and so that was signaling that the chart was heating up. And then notice how EMA4 was huge resistance, and then you had the big hammer down here in December. So that was a signal that players were loading. And so whenever a hammer forms at the bottom of the chart, that's a signal that there's upside potential. So keep an eye on that. And then boom, some good news. Something happened here in December, and everybody loaded, and it took off, and this giant volume bar was your signal that this had more upside potential. So the hammer and the big volume bar were both signals that this was a potential for a good play. And then the close above the middle Bollinger Band started the new uptrend. And so if you're a long-term swing trader, you load on the break above the middle Bollinger Band, and as long as it holds, you keep on riding. So you could have theoretically loaded this back in December of 2016, and there hasn't been a close below the middle Bollinger Band since. You could theoretically still be riding. You could have loaded down here in the $1 to $2 range and been up, hundreds of percent. So keep that in mind. Sometimes the best trade is just to keep riding. A lot of people overtrade. It's good to have long-term swing trades that if the weekly chart is bullish, you keep riding. Okay, so take a look at GALT. This is another weekly chart I want to show you. It is really hot right now on the daily chart, and it's been pushing hard with riding EMA4 support higher on the daily chart. And so I wanted to show you the weekly chart here. What's going on? It looks like it's filling the jar back to this April high close level. That's the key level to break. Right here around just below 320, and so it's going to need to bust through the upper Bollinger Band at 276. That's always a big resistance level. Notice the multiple white candles in a row. It's been turning the middle Bollinger Band into support. It had a nice bounce down here off of the 50 and 100 week moving averages. So it's got, it's performing well. It's on a multi-week run. You've got a bullish crossover just starting on MACD on the 12, 26, and 9. So that's a signal that the chart's really heating up, along with the 8, 13, and 5 already crossed. Notice that down here, when you had the run from down here to up here, there was first a MACD bull cross. First, this MACD 8, 13, and 5, it crossed way back here and was signaling the start of the run. And then the 12, 26, and 9 signals later, and so it crossed over, and then notice middle Bollinger Band broke, and that was another signal that an uptrend was starting. So this is just crossing over right now. The 8, 13, and 5 just crossed over. So this is signaling, if you look at the past history, this could keep pushing higher. Nothing, goes straight up. It could take a pause or whatever. But as long as candles are riding EMA4 support higher above the middle Bollinger Band, the signal is to keep riding if you are a swing trader. Okay, notice that RSI is at 63, so there is still room to run until overbought levels. On that previous run that I showed you, notice that RSI had run to much higher levels. So check it out. So it's still got some room between this level and that level. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.